A comprehensive guide to tax regimes in Pakistan. Introduction. Taxation is a complex and critical aspect of any economy. In Pakistan, the tax system is designed to cater to various sectors and types of taxpayers. This article provides an in-depth understanding of different tax regimes, including super tax, minimum tax, turnover tax, SME tax rate, corporate tax rate, and the final tax regime. We will also delve into the tax rate slabs for salaried and non-salaried individuals. Super tax. Super tax is a temporary tax introduced in the tax year 2015. It is applicable to banking companies and non-banking companies that have an income of Rs. 500 million or more. The rate for banking companies is 4% of the income, while for others, it is 3%, Section 4B. Minimum tax. Minimum tax is a safety net tax to ensure that entities making certain levels of sales contribute to the tax revenue. It applies to individuals, AOPs, and companies with low taxable income or tax losses, and those who enjoy tax credits, exemptions, concessions, or rebates. The rate varies depending on the nature of the business and the taxpayer's status. Section 113. Turnover tax. Turnover tax applies to businesses with a turnover exceeding Rs. 10 million. The rate is 0.25% of the turnover for companies and 0.5% for individuals and AOPs. However, certain sectors like petroleum dealers are exempted from this tax. Section 113C. SME tax rate. Small and medium enterprises, SMEs, can opt for taxation under the final tax regime. The rate is 0.25% of the gross turnover for businesses with an annual turnover not exceeding Rs. 100 million. For businesses with turnover exceeding Rs. 100 million but not exceeding Rs. 250 million, the rate is 0.5% of the gross turnover. 14th Schedule, Rule 4. Corporate tax rate. The corporate tax rate in Pakistan is 29% for the tax year 2023. However, certain sectors like banking have a higher rate of 35%. First Schedule, Part 1, Division 2, Table I. Final tax regime. The final tax regime, FTR, is an alternate tax regime where tax is collected at the source and is treated as a final tax liability. It applies to certain categories of income like dividends, interest, royalties, and certain types of services. The rates vary depending on the nature of income. Section 169. Salaried and non-salaried individual tax rate slabs. The tax rate for salaried individuals ranges from 5% to 35% depending on the income slab. For non-salaried individuals, the tax rate ranges from 5% to 35% depending on the income slab. First Schedule, Part 1, Division 1. Advantages of each tax regime. Each tax regime has its unique advantages. The super tax, for instance, is a temporary measure aimed at generating additional revenue from high-income entities. The minimum tax ensures that all entities making certain levels of sales contribute to the tax revenue. The turnover tax is a simplified tax regime for small businesses. The SME tax rate encourages small and medium enterprises by offering a lower tax rate. The corporate tax rate is a standard rate applicable to all corporations, ensuring fairness. The final tax regime simplifies the tax process by treating the tax collected at source as the final tax liability. Conclusion. Understanding the tax regimes in Pakistan is crucial for compliance and strategic planning. Whether you're a salaried individual, a small business owner, or a corporate entity, being aware of your tax obligations can help you navigate the complex world of taxation and make informed financial decisions. Please note that this article is based on the Income Tax Ordinance, 2001, amended up to the 30th of June 2023. For the most accurate and up-to-date information, please refer to the relevant tax laws or consult with a tax professional. Always consult with a tax professional for personalized advice.